Welcome to our new video. Today, we're going to discuss the most frequently asked questions about corporate social responsibility (CSR) under the Companies Act 2013. Whether you're a student, a professional, or a business owner, understanding CSR rules and responsibilities is crucial in today's corporate environment. So grab a notebook and stay tuned as we break it down point by point. Now 1. Whether a holding or subsidiary of a company fulfilling the criteria under Section 135(1) of Companies Act 2013 has to comply with the provisions of Section 135, even if the holding or subsidiary itself does not fulfill the criteria? No. The compliance with CSR requirements is specific to each company. A holding or subsidiary of a company is not required to comply with the CSR provisions unless the holding or subsidiary itself fulfills the eligibility criteria prescribed under Section 135(1) stated above. 2. Whether provisions of CSR are applicable to a Section 8 company? Yes, Section 131 of the Act commences with the words "every company" and thus applies to Section 8 companies as well. 3. What is the role of the government in the approval and implementation of the CSR projects of a company? Provisions of Section 135, read with Schedule 7 of the Act and Companies CSR Policy Rules 2014, provide the broad framework within which the eligible companies are required to formulate their CSR policies, including activities to be undertaken and implementation of the same. CSR is a board-driven process, and the board of the company is empowered to plan, approve, execute, and monitor the CSR activities of the company based on the recommendation of its CSR committee. The government has no direct role in the approval and implementation of the CSR projects of a company. 4. What are the mechanisms for monitoring the CSR process? CSR is a board-driven process, and the board of the company is empowered to plan, decide, execute, and monitor the CSR activities of the company based on the recommendation of its CSR committee. The CSR architecture is disclosure-based, and CSR-mandated companies are required to file details of CSR activities annually in MCA 21 registry. Companies are required to make necessary disclosures in the financial statements regarding CSR, including non-compliance. The existing legal provisions such as mandatory disclosures, accountability of the CSR committee and the board, and provisions for audit of accounts of the company provide sufficient mechanisms for monitoring. For more detailed information, visit the official website of VMK Professionals, wvmkpros.com, and always review the latest amendments before execution, as laws keep changing frequently. 5. What is the role of the government in monitoring compliance of CSR provisions by companies? The government monitors the compliance of CSR provisions through the disclosures made by the companies in the MCA 21 portal. For any violation of CSR provisions, action can be initiated by the government against such non-compliant companies as per provisions of the Companies Act 2013 after due examination of records and following due process of law. Non-compliance of CSR provisions has been notified as a civil wrong WEF 22nd January 2021. 6. How is average net profit calculated for the purpose of Section 135 of the Act? Whether profit before tax or profit after tax is used for such computation? The average net profit for the purpose of determining the spending on CSR activities is to be computed in accordance with the provisions of Section 198 of the Act, and will also be exclusive of the items given under Rule 2(1)H of the company's CSR Policy Rules 2014. Section 198 of the Act specifies certain additions, deletions, adjustments to be made while calculating the net profit of a company. Mainly, it excludes capital payments, receipts, income tax, set off of past losses. Profit before tax, PBT, is used for computation of net profit under Section 135 of the Act. 7. What is the meaning of surplus arising from CSR activities? How can this surplus be utilized? Surplus refers to income generated from the spend on CSR activities, e.g., interest income earned by the implementing agency on funds provided under CSR, revenue received from the CSR projects, disposal, sale of materials used in CSR projects, and other similar income sources. The surplus arising out of CSR activities shall be utilized only for CSR purposes. 8. Whether contribution to the corpus of an entity is an admissible CSR expenditure. No, the provision relating to contribution to corpus as admissible CSR expenditure has been amended, and the contribution to corpus of any entity is not an admissible CSR expenditure. WEF, 22nd January 2021. 9. Whether expenses related to transfer of capital asset as provided under Rule 7.4 of Companies, CSR Policy Rules 2014, will qualify as admissible CSR expenditure. Yes, the expenses relating to transfer of capital assets such as stamp duty and registration fees will qualify as admissible CSR expenditure in the year of such transfer. 10. If a company cannot take the benefit of set-off of excess amounts spent in the previous financial year because of non-applicability of CSR provisions, will the excess amount lapse? Yes. The law states that the excess CSR amount spent can be carried forward up to immediately succeeding 3 financial years. Thus, in case any excess amount is left for set-off, it will lapse at the end of the said period. That's it for today's video. We hope you learned something new about CSR compliance and its practical implications. If you found this video helpful, let us know your thoughts and experiences in the comments below. And don't forget to like, share, and subscribe to our channel for more useful content like this. Hit the bell icon so you never miss an update. Thanks for watching. See you in the next one.